I'm Kramer. Welcome to Mad Money. Welcome to Kramer. Other people want to make friends, just try and make some money. My job is not just to entertain, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Kramer. The market doesn't just go up like crazy for no reason. It goes up for many reasons that often fly in the face of the analysis you hear every day, including this one, where the Dow ultimately did go down. It dipped to 148 points. S&P went down 0.19%, but the Nasdaq advanced 0.45%. There we go again. Now, I've spent the better part of this year studying the pandemic because I thought it really held the key to the market, at least for most of the professional money managers out there. And that was right. But you know what we've discovered? The professionals are no longer the only cohort that matters. We've got a massive group of individual investors who become, in many ways, a more powerful collective force than the professionals. And they simply don't care about the same things as the experts. And they're the ones who are the marginal buyers and sellers of stocks. The return of the individual investor has changed the entire character of the market. Ever since the dot-com collapse in 2000, the dialogue surrounding every rally was framed around what could go wrong. What made you not be able to sleep at night? There was very little belief in stocks as an asset class. For the past 20 years, the conventional wisdom said stocks could no longer be trusted. They all trade together as a unit, which means they can tend to lose their value way too quickly when something goes wrong. That thesis only grew more convincing after the financial crisis. On top of that, the conventional wisdom insisted that only a fool would try to pick individual stocks. Too easy to be wrong. But you might as well stop trying to beat the market and just put some of your money in an index fund and park the rest in safely in bonds. In the last 8 months, though, that conventional wisdom has been stood on its head by a new generation of investors who came of age after the rise of commission-free trading. They're much more optimistic than the older generation, who are so beaten down they've given up on stocks. They don't care what Wall Street thinks. Upgrades, downgrades, price target changes means nothing to them. It's just gibberish. When an analyst upgrades Tesla after fighting all the way up, well, they accept the fact that that person's not adding any value. They don't even care about traditional parameters of valuation like price to earnings or even price to sales. They only care about who's doing what's right and who's doing what's wrong. If they buy a stock that turns out wrong, they can always trade out of it for free because there are no commissions. They're not bound to anything. In other words, this pandemic has become the ultimate changing of the guard. But you might have missed it if you're not as plugged into what's happening with the younger generation. Fortunately, many of the younger investors love Mad Money. I run them all over the internet. I want you to see what they say to me. I want you to consider me the world's unlikeliest avatar of youth culture. First, these newer investors don't understand the appeal of index funds. You can't get rich with them. If you wait for the S&P 500 to admit Tesla, which they talk about all the time, you miss the best move of your life. The most interesting stocks might be gathered into ETF baskets that they experiment with, but mostly they prefer to do homework on individual names themselves because they know how to research on the internet. And yes, they'll buy calls, okay? Is that really a sin? Only if you do it irresponsibly. They're doing it pretty well, as far as I can tell. Stock picking may be a lost art for most people over 30, but these kids are bringing it back. Second, they hate being told what to do. They know the smartest people in the world don't go to Wall Street anymore. They either try to break in at a tech company or start their own businesses now that it no longer requires lots of capital. Witness everyone making a killing on Instagram or Shopify or Etsy who starts a business, not to mention the businesses that get financing from Square. These aren't just cute developments, people. The stock market and the internet have freed millions of young people from their proverbial chains. We've now got a whole generation of younger adults who are basically raised by the World Wide Web. And I think we underestimate how empowering that is and how smart they are and how much they've learned from it. Third, these younger stock pickers, well, they're having a great year. We've heard over and over again that the pandemic accelerated the digitization of industry by 5 or even 7 years, maybe 10 years. Some of that's because of cloud adoption, but a lot of it is simply because the internet gives you cheaper, smarter ways of doing things. There's a whole wave of companies that exist to help you harness the power of the web without a computer science degree. Hey, by the way, that is actually the secret sauce behind Salesforce, behind Snowflake, or Zoom. You don't need to be a tech genius anymore. You just need a smartphone. The news about the pandemic has played out in their favor, too. Earlier this year, the pessimists warned us that it could take ages to get a functional vaccine. But between all the drug companies that got to work on it and all the governments throwing money at the problem, we're going to have a bunch of vaccines very, very soon. Why is that good news for younger investors? Because they're so collectively lacking in cynicism that they've been willing to buy the stocks of companies that will make a fortune once we beat COVID. why don't we just talk about one? Okay, I'll just pick one. Well, I've been recommending Norwegian Cruise, okay? And we've caught a double here because I believe in management, and I know that they can borrow money, all the money they want. Wall Street cynics see the cruise lines as hobble companies, weighed down by excessive bond issuance and dilutive equity offerings. But they've been dead wrong for the last 4 months. You know when they're going to start liking it? I'll tell you one. When they do what I did last night, I saw an ad for Norwegian Cruise when I was watching the NFL. I mean, they got an ad already. They wouldn't spend that kind of money if it weren't for betting on a big comeback. Finally, these younger investors believe in environmental sustainability, not just as an ethos, but as a business model. They know there's money in cleaner energy. They like electric vehicles and hydrogen fuel cells. They take companies seriously when they talk about going green. Remember, they lack cynicism. They do their own research and decide whether to trust or not trust. When they trust, they pull the trigger. Of course, you could say this whole cohort of new stock pickers simply got lucky. I get that. Hate them or like them, China beat the virus and is now pulling the whole world higher. That is what's happening, by the way. We can see it for the commodities rally. Wall Street got its ideal outcome in the election. Yes, that's right. They're worried about Trump's trade policy and Biden's tax policy. Those are both off the table because Biden won the White House, but the Democrats didn't pick up enough Senate seats to raise taxes. Most important, we have a Federal Reserve chairman who knows what the heck he's doing. Jay Powell kept his foot on the gas pedal because 14 million jobs depend on it. Are these younger investors merely looking at the world through rose-colored glasses? No. No. I think the rest of us are looking at the world through crud-encrusted, cracked lenses that make us feel beaten down and unsure, even when things might be going well. Now, you got two choices here. You can stay negative and hope these new stock pickers get blown up, get their comeuppance, or you can try to learn from them, starting with the idea that buying a bond with a sub-1% yield is a waste of money and will get you nowhere. The bottom line, I think it's time to stop disrespecting the younger investors who've nailed 2020 every step of the way. Start taking them seriously. Even after this incredible run, it's not too late to join them.